Good morning, Southern California. Fred Arnold on AM 1220 KHTS, the Southern California Business Spotlight. I'm joined by Jake Young. Jake Young's a mortgage professional at American Family Funding. Welcome, Jake.
Hey, Fred. Thanks for having me back.
I want to rapid fire a bunch of questions.
Yeah, let's do it.
Some of the challenges that we run into on a mortgage when we're helping you get a loan, they're wide and vast, right? One of them. So I'm gonna go through them and just some of the challenges, how to prep, questions you should be asking your realtor and your loan officer.
Yes.
Condos.
Condos can be a little bit tricky for financing. There's a higher risk of defaults in condominiums historically. So a lot of times as lenders, there's more overlays that are put upon lenders when you're doing financing.
And overlays are requirements?
Requirements that either come from Fannie Mae, Freddie Mac, the government, or even individual banks. They'll just say, hey, there's a higher risk involving in a condo, so we're going to require a few extra things. So it's important when you're getting financing in the condo. If you're working with a loan officer, you want to let that loan officer know we're looking at a first-time home or a condominium, and if we go with a condominium, that lender needs to do some research about that particular condo complex. Is there any pending litigation that's going on in that condominium complex? The lender wants to know that. That could affect whether they'll give a loan in that property.
And that'll affect you owning the house.
Yeah, absolutely. Yeah. If you're buying that, you may want to know that there's a lawsuit involved in it. Will it affect you as being a homeowner in that complex? So there's other questions that the lender's going to want to know about that particular HOA, that particular complex. So when you're doing financing a condo, you got to make sure that the lender's aware, make sure that the lender knows the name of the complex so that they can reach out to that HOA, the management company, and ask some very detailed questions to make sure that financing is going to go through.
And not a problem. HO6 policy.
Yes.
Insurance.
Yes. So some homeowners associations for condominiums, they'll have insurance that covers through your HOA dues that will cover what they call a walls in. They'll cover the inside contents.
So everything.
Yes, and some homeowners associations do not, and so it'll be up to the people buying the house to make sure they have that little extra insurance policy. It's typically not very much, but they'll need that added coverage. And so it's important when you're writing an offer and you're going to want to know, what are my monthly payments going to be? What's the mortgage, the property taxes, the HOA dues, and do I have to have additional insurance called an HO6 policy, or is it included with the dues? They're going to want to know that.
Solar.
Yeah, as a lender,
that's the biggest challenge right now.
It can be. I know it's getting more commonplace, and hopefully as we go, full speed ahead in the future, that solar and lending will be able to mesh a little bit better. But yeah, there can be times where the lender who's making a loan on a house that has solar, they want to know some particulars. Is that solar system owned? Is it owned by somebody else, and the person living in the house is leasing it? There's certain aspects. Is there a lien on the property from the solar that needs to be taken off or subordinated so that a new loan can go on the property? There's a lot of moving aspects when you're buying a home with solar. Yes, it can add value, but the lender's going to want a question, or they're going to want to know the particulars about that solar. Is it leased? Is it owned? Are there liens on the property from the solar?
This is one thing that comes up over and over, and that is agreements between the buyer and the seller that are disclosed in the purchase contract also have to be disclosed to the lender. So anything that you put on the purchase contract, whether it be the roof is leaking.
Yes.
So everything has to be disclosed when it comes to negotiation.
Yeah, so if you're a buyer or a seller and the agents want to protect you and write everything down, you have to know too that may or may not affect the loan. If you are a bank and you're reviewing that sales contract and it mentions something about the property that could be a red flag to the lender,
like a health and safety issue,
they're going to want either report, they're going to want an explanation, they're going to want details on that. So you have to be aware if you're buying or selling a home and you like to be detail oriented and write everything down in the purchase agreement, you have to be aware that it may affect financing on the home. The lender who's loaning, a significant amount of money, $500,000 or whatever it is, they're going to want to know about that particular issue too. So if you write it down, be prepared if you're selling the home to explain it or to have a report to back up that there's going to be no issue with the property.
The advantages to a realtor.
I work with clients who, if you're going to list your home, like list it for sale, there's such a difference between working with an expert, trying to do it on your own. I mean, same thing with getting a home loan. You're going to want to work with somebody that you know, like, and trust. And it goes to the same thing with if you're going to sell a property, you're going to want somebody who's an expert. There's so many legalities in real estate. You want to protect yourself. A realtor is going to be able to help you protect yourself. They're going to be able to help you have the right price point to sell your property. Or if you are a buyer and you're working with your own realtor, they're going to be able to look out for your best interest and not maybe what the selling agent's best interests are. So I think it's important to have an advocate on your side who's going to give you all the knowledge that you need. And that's what a good realtor is going to be doing. Explain the legalities of it, help you be in the best position that you'll get, the fairest deal possible.
Yep.
And doing it on your own, there's just too many moving parts to real estate to do it on your own.
Yeah, avoid litigation, without a doubt.
Yeah.
Without a doubt. All the homes I've purchased, I've used a realtor, and I'm in the business. Pulling credit versus not pulling credit. It might hurt my credit score a few points by pulling credit, but you got to know what that is, isn't it?
Yeah, I think it's key. If you want to be a motivated buyer, if you really want to get into a property, it's imperative that you work with a lender who knows what they're doing. But yeah, you're going to have your credit report pulled. They got to know what the scores are. And if there's things that need to be fixed, that's okay. It may not be as high as you want, but at least that loan agent, that loan originator is going to be a professional. They're going to help guide you on different things that you can do to boost your credit score. And so, yeah, maybe if you have another hard inquiry, 3 months later, hopefully you'll have a higher score because that lender is going to help guide you on things that you can do in the short term to improve your credit. So it's imperative that you get fully approved, and somebody needs to, the lender needs to pull your credit and know exactly how to best guide you and help you and be an advocate.
And I know I rapid fired some questions the last 7 minutes. Thank you for covering condo, solar, and there's so HO6 policy, credit, using a realtor. There's so many different things. Jake, those who want to reach out to you?
Yeah, thanks, Fred. Area code 661-505-4303.
Thanks, Jake Young, mortgage professional with American Family Funding. Well, I hope you enjoy this edition of the Southern California Business Spotlight. I'm your host, Fred Arnold, on AM 1220 KHTS.